This video is based on the technical analysis of Hong Kong 50, which is also known as HSI. And at this point in time, we're on the monthly chart. And what we'll do in regards to this video is identify the market structure of HSI, market patterns that we should be paying attention to, key support and resistance levels, important candlestick patterns, as well as potential buy and sell levels. So without wasting any further time, let's get straight into the actual technical analysis. And just to recap, the last time we spoke about this particular index, we mentioned that we had a huge M structure over here, which had a neckline at that point, and we saw at this point over here price breaking to the bottom side of that neckline, heading back up to the neckline to give it a test. And at that level is where we should have looked for those potential selling opportunities. And that is because, as I usually say, whenever we have these M structures, we want to see price breaking to the bottom side of that neckline, heading back up to the neckline to give it a test. And at that neckline is generally where we look for those potential selling opportunities, especially if the neckline aligns with any key numbers that we have in regards to the Fibonacci retracement tool, right? So we saw price again coming up to the neckline over here of this huge M structure, and at this point again we saw the market push further down. And that is because not only is this level the neckline of this M structure, but it's also a very strong level of resistance, as we had multiple rejections in and around that area, and it made sense actually for price to actually move further down from that level. But what do we see now that we are on the monthly chart? On the monthly chart, I don't see much at this point. Let's head down to the weekly chart, and here we are on the weekly chart. On the weekly chart, we can see that the market had actually given us this pattern, which is an inverted head and shoulders pattern, as you guys can see, which has the left shoulder on this side, the head is at this point, and the right hand shoulder is at that level. And this pattern also has a neckline at that point, which is also the very same neckline that that huge M structure has that we spoke about on the monthly chart. But here we are on the weekly chart. What else do we see in regards to the weekly chart? Let's have a look. I'm just gonna zoom in a bit. Let's see. On the weekly chart, we can see that we are indeed in a downward trending market. But as I said, we have what seems to be an inverted head and shoulders pattern, and the anticipation at this point is for price from where it is to move further up to at least this level, which is the neckline of that pattern. Anyway, from here, what I will do is head down to the daily chart, and here we are on the daily chart, right? Here we are on the daily chart, and what do we see? On the daily chart, we can see that, in fact, before I continue, let me just recap. Remember, guys, on the weekly chart, we spoke about how we have this inverted head and shoulders pattern, right? But now that we are on the daily chart, and let's just zoom in a bit, on the daily chart, we can also see that we have another pattern, which is an inverted head and shoulders pattern, and it has a neckline more or less at that point. The side is the left shoulder, this is the head, and this is the right hand shoulder. So it speaks to what I said earlier, in that indeed we should be looking for those potential buying opportunities at this point, and that is because we have this huge inverted head and shoulders pattern. Rather, to add to that, we also have another smaller inverted head and shoulders pattern at that point, which has a neckline at that level. So that's confluence as far as I'm concerned. But just to zoom in, let's see what else is happening in regards to the daily chart. On the daily chart, we can see that where we have the right hand shoulder of that inverted head and shoulders pattern, we also had what is an overextended W structure, as you guys can see. And it is an overextended W structure because that first leg is much lower than the second leg, right? And we can also see that price had broken to the upside of that neckline and then came back to the neckline to give it a test. And I believe that more or less where we have that neckline is where we should be looking for those potential buying opportunities, especially if that neckline aligns with any key numbers that we have in regards to the Fibonacci retracement tool. In fact, if you were to utilize the Fibonacci retracement tool, you would see that more or less where we have that neckline, we have the Fibonacci retracement number of 61.8%, right? Anyway, what else do we see on the daily chart? On the daily chart, we also have this candlestick over here, and what it is a bullish candlestick with a small body and quite a long upper wick, right? and it tells us that at the top where that wick ends, we have a lot of liquidity there. And as you guys know by now, liquidity is actually money that needs to be triggered by the market at one point or another, and it adds to confluence in as far as looking for those potential buying opportunities, in that if we do indeed find a good buying opportunity at this point, I believe that our first take profit should be around this level. And that is because, as I said, we have this candlestick over here which is carrying all of that liquidity. To add to that, we also have this level, which is a very strong level of resistance at this point in time, and that is because we've had multiple rejections in and around that level, as you guys can see, and in the future we may get another rejection at that level, right? But just remember that on the weekly chart we spoke about how we have that huge inverted head and shoulders pattern, and ideally I would love to see the market from this point actually move further up to around this level, which is where we have that neckline of that huge M structure that we spoke about, and it's also now a very strong level of resistance, as we've had multiple rejections in and around that area, as you guys can see. Anyway, let's zoom back in and see what else is happening. What else do we see on this chart? At this chart, rather on this chart, I don't see much out, but I also want to point out that we also have a gap over here, and gaps are very much similar to liquidity areas in that they too are carrying a lot of money, right? So there's a lot of money stuck within this block over here, right? And it would make sense actually for the market to move further up to grab all of that liquidity, right? But what else do we see at this point? I don't see much. I'll just head down to the H4 chart, and here we are on the H4 chart. And just to recap, remember on the daily chart we spoke about how we have this overextended W structure which has a neckline at that point. We saw price coming back to the neckline to give it a test, and I said that at this point is where we should potentially be looking for those buying opportunities, because at this level over here is where we have the neckline of the W structure, and the neckline also aligns with the 61.8% Fibonacci retracement level or 2, right? Anyway, here we are on the H4 chart. What else do we see on the H4 chart, guys? And as much as I'm saying that at this level over here is where we should be looking for those potential buying opportunities, I want you guys to also see that we have these candlesticks over here, right? And what they are liquidity candlesticks, because they are bearish candlesticks with small bodies and very long lower wicks, right? And where those wicks end at the bottom, we have a lot of liquidity there. And as I said earlier, guys, liquidity is actually money that needs to be triggered by the market at one point or another. So as much as I'm saying that where the market is currently is where we should be looking for those potential buying opportunities, we may actually see a situation where the market moves further down to grab all of those liquidity points, right? And then only moves further up, right? And this would now give us a very nice overextended or multi-session W structure. I hope you guys can see that, right? And what I'm doing at this point is just speculating. I'm showing you some of the possible outcomes that we may encounter in as far as Hong Kong 50 goes. And yeah, let's continue. What else do we see? Another thing that I also want to point out is that we have this channel over here, and we can see that in as far as the H4 chart goes, we are in an upward trending market. And as much as I said that at this level is where we should be looking for those potential buying opportunities, we may actually see price move further down to just test that trend line, and then we may see the market move further up, and we would then have these two prior rejections, and on the third rejection we may then potentially look for those buying opportunities, as you guys can see, right? So that is it in as far as my analysis goes. I don't see much at this point, but I also want to point out in closing that we also have over here this overextended W structure, or rather M structure, and it has a neckline at that point. And as much as I'm saying that we should be looking for those potential buying opportunities at these points, we may actually see a situation where the market moves further up to the neckline to give it a test and then moves further down. So we just need to be careful, need to be very careful. But myself personally, I would love to see the market from where it is move further up, and that is because, as I said, guys, earlier we spoke about those two inverted head and shoulders pattern. There's one on the weekly chart and there's another smaller one on the daily chart, right? And on the H4 chart we can see we have a W structure over here with a neckline over there, right? And yeah, as I said, my bias is for the market to continue to move further up, but just be careful, because we have those candlesticks, those bearish candlesticks that I spoke about, that are carrying all of that liquidity. And I also spoke about how we have this M structure which has a neckline at that point, and you know that whenever we have these M structures, we want to see price break into the bottom side of that neckline, heading back to the neckline to give it a test, and at that point is where we look for those potential selling opportunities. So be careful and peace out.